Welcome to ForexTV.com. Today is Wednesday, October 15th. I'm Kathleen Reddington with your New York Forex Market Buzz. The yen gains on the dollar for the first time in 5 days. And now for a look at the latest headlines from the CEP News Desk. U.S. retail sales fell by more than expected on both fronts for September. The All Items Index declined by 1.2% for the month against a negative 0.7 consensus forecast. Retail sales excluding autos declined 0.6% against expectations for a 0.2% drop. The core measure of producer price inflation grew above expectations with a 0.4% month-over-month increase. Food prices increased 0.2% in the month, while energy dropped 4.6%. Manufacturing in the state of New York slumped in October. The New York Fed's Empire State Manufacturing Survey fell to negative 24.6, well below September's negative 7.4 reading and against expectations to fall to a negative 10. This marks the worst reading for the survey since its inception in 2001. Fed Chief Ben Bernanke just spoke in front of the Economic Club of New York at Columbia University. He warned that even if the markets do stabilize, a recovery will not happen right away. However, he says that the Fed is willing to use all their tools at their disposal in order to strengthen the financial system. UK jobless claims rise in September, with August unemployment hitting 5.7%. The percentage of the UK labor force claiming unemployment benefits rose to 2.9% in September. Eurozone inflation was confirmed at 3.6% year over year for September, which was in line with expectations. It was down from August's 3.8%. And today we are joined by Stephen Leahy of Backbay FX. Hi, Stephen. How are you doing today?
Doing very well, Kathleen. Thanks, as always, for having me on.
All right, the yen has made gains on the dollar based on speculation that the initial $250 billion injected into the banks will not work, and the way the Fed has planned it to work. What do you make of the Fed's plan, and what about the yen on the dollar?
You mentioned earlier in the headlines leading up, Kathleen, that Ben Bernanke states that the Fed has available, its whole arsenal of weapons to fight the slowdown. It seems to me that they're taking a heck of a lot of shots, and any ammunition they have left is going to be stuff that is not normally thought of, and I think markets don't like the idea that the Fed keeps preaching that he is willing to do whatever it takes, kind of bend the rules a little bit. That being said, clearly the markets have taken this as a sign of dollar weakness. More importantly, I think the outlook on the overall economy, as we think about the U.S. dollar this point in time vis-a-vis the other currencies, we've been leading, the U.S. economy tends to lead the global economies into recessions and out of recessions. Seems like we are still leading into a recession at this point in time. And so to us, a lower dollar and kind of a stronger yen makes sense. Also from a technical perspective, it seems pretty clear to us that dollar yen still got some lower levels to reach in the long-term picture. Maybe not in the short term, but in the long term, I think we're going to have to head below the 100 mark and stay there for a while and root around there to test some lows before we can ever make a meaningful change and head back higher.
Now, I want to stay focused a little bit on the yen's gains. The sterling was the only European currency to not fall to the dollar on the overnight, but we've seen the yen making big gains on the sterling. What are your thoughts on the sterling-yen pair?
Well, I think I sent over a chart for you guys to take a quick look at on the sterling yen. Pretty clear to us that, as we've spoken about before, Kathleen, we think that sterling yen correlates very highly with global equities and is a real good barometer for risk aversion in a very big sense. To us, looking at the recent chart, certainly as equities rallied starting Friday, when clearly the news of a $250 billion bailout directly to the banks kind of leaked, so Friday afternoon, going into the overnight Sunday and into Monday's U.S. sessions here, sterling yen certainly moved a lot higher with the equity markets step by step. That being said, we think that move was a little bit too far, too strong. We think that sterling yen will give up some of that, which it has in the last 12, 14 hours or so. But more importantly, from a technical standpoint, we think that sterling yen is setting up for another fall here, and so we've got some short positions on. We're targeting somewhere in the low 172 range, somewhere 172 to 172.50. To us is a critical level here. If sterling yen breaks below the 175.80 level, at that point I think we've got a real good shot at moving another 300-400 points lower in the next 24 hours or so.
All right, retail sales in the United States were no short of abysmal in the last report, and people are looking to officially call this a recession. What is your take on this, and how do you think this is going to affect the U.S. dollar?
U.S. dollar, well, I do think that retail number is something that showed up that most everybody who pays any sort of attention to the markets kind of has realized in that, the local malls are slower. People are actually discussing the slowdown. People from wealthy bankers to kind of, factory workers, a lot of people are thinking about how this affects their income. Specifically, when all of our assets, be it our houses or our retirement funds or our mutual funds that are not retirements, when those have all dropped significantly, of course, we all feel poorer and we all cut back on spending. That being said, U.S. rates seem to be fairly low at this point in time with the recent emergency cut down to 1.5 from a 2.0 level. Barring that emergency cut of 50 basis points that was kind of globally coordinated, we would have said about 1.5 or 1.25 be the low U.S. rates. We do think the Fed's still going to have to take some extraordinary measures, and we think U.S. rates can go even a little bit lower at this point in time. And so that, of course, portrays to dollar weakness, except for the fact that in the case of the euro dollar and sterling dollar, in fact, those are the countries we think, they've certainly got more room to cut than we do. We think they are behind the curve in terms of where this recession is, and I do think we are in a recession. There's no doubt about that in my mind. And so we think that trying to do short dollar versus euro or versus sterling may be foolhardy at this point in time.
And finally, despite the bad news in the U.S., throughout the morning, the dollar still seems supported on the euro and is mixed so far. What is your strategy for the euro-dollar pair?
Well, I'll tell you, once again, I think we sent over a chart for you. In the short time span, in the short-term period over the next 24, 48 trading hours or so, we actually think euro-dollar is going to rally here. Right now, it's kind of testing some lows on the bottom of a channel that it's formed in the last couple of days on a particular chart that we tend to use, some Bollinger Bands on a 2-hour period. We seem to be right at the bottom level there, and so we've just put on a buy at this level here. We'll stop ourselves out another 40, 50 points lower, but it seems to us the risk-reward scenario in the short term favors a higher euro-dollar. We're targeting about the 137.50 level or so at this point.
Okay, Stephen, thanks so much for joining us.
Well, thanks so much for having me on, Kathleen. One more point, if I may, real quick. Dollar Canada has made enormous moves higher. Clearly, the Canadian dollar is getting weaker versus oil prices, and a great way to play any thoughts or trades on the oil market is really to play with the Canadian dollar versus U.S. It's a pretty high correlation lately. We think oil's moved maybe a little bit too low, and therefore dollar Canada a little bit too high. We think there's an opportunity to sell dollar Canada at these levels. Yeah, we've really seen oil looking for a bottom. Thank you, Stephen. Thanks, Kathleen. This has been your New York Forex Market Buzz with Stephen Leahy of Backbay FX. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.